It's an important milestone in the growth and the maturation of the industry. The crypto industry has been plagued by inexperienced entrepreneurs like Sam, unreliable custodians like FTX, incompetent creditors, a dozen went bankrupt in the last year or two, unscrupulous promoters, and their failure is a necessary rite of passage for an industry that's going to lead to a new, more stable, more scalable ecosystem that'll be based on Bitcoin. Public companies like Block, MicroStrategy, Marathon, a dozen Bitcoin miners that are public, institutional money managers like Fidelity and BlackRock, and regulated banks when they eventually become custodians. The offshore crypto exchanges, the stable coins, the crypto tokens, the DeFi projects, they're going to shrink, fade into the background, and decouple from mainstream and institutional digital assets marketplace that'll be based on Bitcoin. I think it's critical for there to be a spot ETF for mainstream retail investors and mainstream institutional investors to participate. So it's going to lay a base layer that's going to allow large amounts of capital to flow into the industry. MicroStrategy is a special investment vehicle for Bitcoin long bulls. We're different from an ETF because we don't charge a fee. We can use intelligent leverage. We borrowed $2.2 billion at 1.6% interest to buy Bitcoin. And we can generate a tax-deferred Bitcoin premium either by using cash purchases or by capital markets activity. So we're not for everybody, and in sovereign wealth funds that want to buy $50 billion worth of Bitcoin can't fit into the MicroStrategy capital structure. But if you want leverage and this tax-deferred yield and no fee, then we're an interesting alternative for people in the space. I think it's going to help everybody in the space. They're going to accelerate education efforts and adoption. Already you can see Fidelity analysts are making a huge impact on the digital asset space. So as you see Wall Street analysts from all these ETF firms and you see their education and marketing efforts come into the space, and as they provide the rails for traditional institutional investors and endowments and the like to engage, they're going to expand the entire ecosystem. But they're not an operating company. They can't take on leverage. They can't not charge a fee. I mean, we literally don't charge a fee. And they can't engage in cash purchases with operating income like we can in order to generate that tax-deferred Bitcoin premium.
We've got Michael Saylor, the Bitcoin maester from MicroStrategy, saying Bitcoin's about to go supernova. Saylor tweeted that in October, MicroStrategy acquired an additional 155 BTC for $5.3 million and now holds 150,400 BTC. Please join us at 5 p.m. ET as we discuss our Q3 2023 financial results and answer questions about the outlook for hashtag business intelligence and Bitcoin. Saylor's making a bold call, saying Bitcoin's value is going to explode when the SEC finally says yes to a spot Bitcoin ETF. That means more folks pouring their money into the crypto wonderland. Bitcoin's been on a roller coaster, hitting close to $36,000 before taking a little dip. But Saylor's like, no sweat, people. He just bought 155 more Bitcoins for $5.3 million, proving he's in it for the long haul. The SEC, the big regulator, is mulling over Bitcoin ETF applications, and word on the street is that they might give it the green light by January 2024. Saylor's cheering on, saying, get ready for a massive boost, because we're looking at a year where demand shoots up and supply takes a dip. Bitcoin is also gearing up for a halving event in April 2024. This means less Bitcoin will be mined, making it even rarer. Bernstein, who used to doubt Bitcoin, is now on board, predicting a wild $150,000 Bitcoin ride by 2025 if that spot Bitcoin ETF gets the nod. It's a Bitcoin bonanza, and we're in for a crypto thrill like never before. Keep your eyes peeled, because this roller coaster isn't stopping anytime soon. Let's continue our enlightening discussion with Michael Saylor.
Well, I think we've reached a nice point, but, when Bitcoin passed $100,000 to $200,000, maybe it'll trade from $250,000 down to $175,000, and people are going to be screaming the end again. Bitcoin is compounding at 40 to 50% annualized growth rate for the past 3.25 years since MicroStrategy got into the space, with a lot of volatility. I think an analyst, Timmer from Fidelity, pointed out it is got the highest volatility of any asset, but it's also got the greatest return. And so, as I've said in the past, volatility is vitality. I'd rather have the volatility and the performance than get rid of the volatility. Gold's not volatile, but it's also down 1% in 3.25 years. So that's not what we're looking for. During this crypto meltdown, the crypto bros offshore and the leveraged hedge funds, they exited the space. They were all bankrupted for the most part. Right now, the natural buyers in the space are Bitcoin hodlers, the maximalists, the people that are sweeping their incremental cash flows into Bitcoin. It's almost impossible, very difficult for mainstream investors and mainstream retail to buy Bitcoin because there are just very few on-ramps. So the natural sellers are the miners, the natural buyers are the hodlers. The trading volume has diminished quite a bit. This is the lull before the storm. Once we get these ETFs in place, that will open up the gateway for mainstream retail and mainstream institutional capital to flow. And the halving in April is going to cut the available supply in half, and it's going to eliminate half of the natural selling. So this next 4-month period is very pivotal to the asset class. We have raised more than $1 billion in the past via ATM offerings, and whenever we did it, it was accretive to our shareholders. This $600 million vehicle will allow us to engage in more capital markets activity. As we're selling stock at a premium and then buying the underlying Bitcoin, we're capturing a tax-deferred Bitcoin premium for our common stock shareholders. So we're very thoughtful about when we do that and how we do that. And sometimes we'll do it, sometimes we won't. It depends on market conditions and where everything trades.
Bitcoin and Ethereum prices declined in trading on Friday, November 3, 2023, as technical oscillators flashed mixed signals for the two largest cryptocurrencies by market capitalization. According to Bitcoin Magazine, a media outlet dedicated to Bitcoin news launched in 2012, representatives, including legal counsel from the U.S. Federal Reserve, have expressed concerns regarding the publication's satirical Fedno merchandise. The Fed's representatives assert that the parodied items, which bear the name, infringe upon its Fedno image and trademarks. In October, the landscape of Bitcoin mining revenue brightened, climbing by $131.45 million over September's figures. Last month's surge in BTC prices significantly bolstered revenues, although there was a slight dip in the earnings from fees, which saw a $5.44 million decrease from the previous month. October emerged as the runner-up for the year in terms of monthly revenue generated from BTC block rewards. That wraps up today's crypto news highlights. Stay tuned for more updates, insights, and analysis from the world of cryptocurrencies. Please share your thoughts in the comments below. Don't forget to like this video and subscribe to our channel for more engaging content.